Hooray! Woohoo! Dow 20,000. It's a new paradigm. It's a brand new day. Happy days are here again. It's time to get back into the stock market. We've learned our lesson, and it really is different this time because Janet Yellen and the Federal Reserve have figured things out, and they guarantee that there will never be a recession again and that stocks will always go up. So the financial media wants us to believe. This is a chart of the Dow Jones Industrial Average from the bottom of the global financial crisis in 2009 to where it is today, and it just broke that 20,000 point mark. And, is it time to get into the stock market? Should you put everything back into stocks because it's going to go up? Well, since the elections, I've been saying that the love affair that the stock market has with Donald Trump is probably going to go for about 6 months. So it'll peter out in May or June and roll over. Now, I don't have a perfect crystal ball, so that may not happen. This could keep on going up for another year. However, it's most likely going to roll over sometime this year, and one of the greatest crashes in history is going to unfold. If it doesn't do it this year, it's going to be next year. And the longer this party goes on, the worse it's going to be for the average investor. And I believe that what's going on here is the big banks and brokerage houses that bought back in this area, and they've made a bunch of cash, are now, if you look at the financial channels, all of the advertisers are the big banks and the brokerage houses. Those are the institutions that the financial media are beholden to. And right now, they're encouraging everybody to get back into the stock market. And the big smart money that invested here, the deep pockets, big smart money, is now doing something called distributing their shares to what is called the weak dumb money. That's the average Joe Six-Pack investor, the guy that has an IRA, 401k, something like that, and he's counting on that for his retirement. He needs that cash, and I believe that you're going to see that a lot of these big banks are actually stealing from these people. Here's a longer-term picture of Dow 20,000. I just showed it to you from the 2009 bottom to there. Even if you take this 14,000 point top to 20,000, that's still some pretty spectacular gains. And back here in early 2000, it was 11,700 points. So it's up almost double in this century. And here's an even longer term view. The Dow was below 1,000 points back in the early 80s, and here we are at 20,000. So it is up 20 times in this 37-year period that's on this chart. That's pretty spectacular performance. So this is a record-setting high. The Dow's up at these highs. Is it really? Or is this just an illusion caused by something else? Well, here's the Dow Jones Industrial Average divided by Western Sweet crude oil. So measured in barrels of oil, the Dow has gone in 1999 when oil was only $10 a barrel. The Dow Jones Industrial Average, if you sold one share, you would have been able to buy more than 850 barrels of oil. And what is it worth today? Well, last Friday, it closed at 374.72 barrels of oil. That is what one share of the Dow can buy you, from over 850 down to 374. So it's crashed by more than 50%. Here's the Dow Jones Industrial Average divided by the price of copper. And the neat thing about the U.S. exchanges is they just quote copper as the price per pound. So this is how many pounds of copper you would have gotten had you sold one share of the Dow in 1999 and bought copper with the proceeds, more than 17,500 pounds of copper. Today, it is worth less than 8,000 pounds of copper. So it's down again by more than half, significantly more than half. Here is the Dow Jones Industrial Average measured in gold. And from its, look at how spectacular this performance was. There was a day back in 1980 where the Dow and the points on the Dow and the price of the gold was the same. So 1 ounce of gold would have bought you 1 share of the Dow. And if you had taken an ounce of gold and bought the Dow, you could have ridden the Dow up. And if you sold at this peak in 1999, you would have been able to get 45 ounces of gold for the 1 ounce of gold that you originally put in it. And that is in less than a 20-year period. That is spectacular performance. But what has happened since 1999? The Dow's gone from 45 ounces of gold to less than 14. It's at 13.76 ounces of gold. That means that the Dow, measured in gold, has crashed by 2/3, greater than 66%. This is abysmal performance, folks. And the reason that chart looks like this is a performance chart from stock charts, a perf chart they call it. And this I started at the beginning of this century, the year 2000, because you can't take this chart all the way back to 1980. It only goes back to like 1999 or something like that. So this is about the maximum that I can get out of it. But what it shows is that the Dow is only up about 75% from the year 2000. It's gone from 11,700 to 20,000. But gold is up 315% in that same time period. So measured in ounces of gold, the Dow is way down. Now, what is causing this illusion where we cannot see where true value lies? There's a sickness, and that sickness is in our currency. There's something wrong with the design of our currency systems around the world. This is the U.S. dollar index. And, there's this downtrend that you can see over the years, which is a worrying thing. However, what is this being measured against? This isn't measured against real stuff. This is measured against a bunch of other fiat currencies that are also borrowed into existence and owed back with interest. For more information on that, watch episode 4 of Hidden Secrets of Money. And that means that it's this fictitious arbitrary value currency that is measured against a whole bunch of other fictitious arbitrary value currencies, and all of those currencies are being inflated. The currency supplies are constantly expanding, so they are all going down measured in stuff. That's the reason prices appear to rise. And so this chart really isn't telling us much. Even this rise here, this is telling us what the exchange rates are, basically, between the currencies. But if those currencies are falling and our currency is falling, this rise doesn't guarantee you that you're going to be able to buy more stuff. It guarantees you're going to be able to buy more euros or British pounds or Japanese yen with the dollar. But you'll most likely be able to buy less real stuff with it. So that is the culprit. Make sure that you subscribe to the channel, because this is the first in a series of videos that we're going to be doing about the stock market setting these record highs and so on. And this is just one small aspect, one way of looking at this thing that shows you that it's actually a lie. So if you got anything from this video, please like it, share it, subscribe to our channel. Make sure you watch some of the episodes of Hidden Secrets of Money. And I'm Mike Maloney, and we'll see you next time. Thank you very much.